Hello, another exam techniques for Principles of Bookkeeping Control. This you will find in chapter 5, and on the test you will find it in task 5. In task 5 there are 10 marks, but out of the 10 marks it will carry at least 8 marks because there will be another journal for irrecoverable debt. We'll discuss it later, but at this moment I'm gonna give you just exam technique for this task 5. Here's a summary of the payroll transaction for, say, assume in last month. We need to do the 4 journals, which is asking for the wages expense, HMRC payments, net wages, and pension liabilities. Before we continue, I'd like to discuss one more thing. Sometimes the wages expense doesn't come in directly, it's also coming as gross wages. So in that case, when we have a gross wages, we need to add GW, say gross wages plus all the employer contribution. For instance, so if we have a gross wages, then we need to add this NIC and this pension. This will be not this one, all the employers contributions basically, but it's already added there. That's why it's already wages expense. Now in the HMRC, what we actually pay to the HMRC, we pay the tax and NI, but we don't pay the pension to the HMRC because they're government nominated companies who we actually pay the pension. They collect the pension for us. So HMRC we pay only tax plus national insurance. Net wages, so from the net wages we need to find it out what is the net wages. If we consider more or less we all working and we are familiar with our payslip, we need to find it out gross wages. So gross wages GW minus all the employees contribution, and pension liability is quite easy because whatever the figures we have, there is 2 contribution, all the pension liability contribution will be in here. So which is employee plus employer contribution. So last thing in here, when we find it out the net wages, we need to find it out the gross wages here, but we don't have the gross wages here. So what is the gross wages? Which is wages expense minus employers contribution. That will be our gross wages. So which means actually in here net wages will be wages expense minus all of this: income tax, employees contribution, and employer contribution. Now let's go to the journal. First one is wages expense. Now one more thing, this is like my own technique. It's maybe contradictory with the theory, but this is how I remember when I came to this solution. When we do the wages control account, I treat as like a suspense account. When we create a suspense account, we need to get rid of this suspense account from the trial balance, we need to make it 0. So in this scenario as well, if we see wages expense is a debit from the debt click, you can see if you're not familiar with 24,489, which is our wages expense. So we put credit as a wages control 24,489. Now this 24,489 we need to get rid of it, we need to make it 0. So we will see at the end whether we can make it 0. And to make it 0, what we need to do, we need to 24,489 debit. So when we come into the HMRC, the journal record will be first wages control wages control debit, and HMRC credit. So how much is the HMRC? HMRC, we're gonna contribute, add income tax on all the NIs, which is 4,580. So 4580, 4580. Okay. Now net wages. As remember, for the net wages, we need to find it out from the wages expense. We need to deduct everything, employees contribution and employer contribution. But if we have a gross wages, we need to deduct only employees contribution. So from now, here is 5,222, 5,222 and 24,489, and we need to deduct this one. Which is 19,267. Again, as I told, remember in the beginning, we need to get rid of this wages control. So straight away, so we need to more debit on that. So wages control, $19,267, and this net wages is actually going from our bank. We're gonna pay to our employee. So bank 19,267, and the finally pension liabilities. We in this here we're gonna contribute. We're gonna include all employee and employers both contribution. So which is, if we add it together, 642. 642 debit and 642 credit. And again, wages control will be debit, and pension liability. Now the final thing, we're going to check whether our wages control is become zero or not. If you add these three figures, if you see in here, the assumption is 24,489. So here we credit 24,489, and now we debit all the full amount. So wages control become zero, which is like no longer exist. It's basically like we create a pot where we put all the money, then slowly each of the items we're gonna pay, and that pot will be emptied, something like that. That's it mainly. I think it will help for your test. Thank you.